So guys, this week we entered the second half of 2019, the third quarter of the year. And with that in mind, I thought it was a good time to just sit down and have a chat and catch up about our trading. It's been a while since we've even gone through something about trading. Unless of course you're following us on Instagram, then you would have seen the exclusive lesson that we put out on IGTV yesterday. Just a little plug there. If you're not following us on Instagram and you are learning to trade or trading, I do think you're missing out on quite a lot. So go and check it out when you have a minute. But what I wanted to talk about is sort of what I would do usually at this time of the year. I think it's a good time to recalibrate and to optimize to make sure you're on the right track for the rest of the year and to make sure you haven't deviated from what you're meant to be doing. So the first thing is that when it comes to this time of year is when you start to see a lot of people flagging with their trading. You know, people who had best intentions at the start of the year who thought, I'm going to do so many hours of trading each week. I'm going to learn to trade. I'm going to be profitable 6 months from now. New Year's resolutions. And then it gets to that halfway point in the year and it's almost like they've even forgotten what trading is. So if that's you, then you're probably not watching this video actually. Let's do this the other way around. If you're still on track with your trading, if you've been committed to the hours that you said you were going to do each week, then just leave a little comment below letting me know. And then I know who are the real ones out there, who are the ones that are actually committed and dedicated to making this work for them. Because it takes a lot of commitment, it takes a lot of work, and it's not going to happen if you're procrastinating, if you're just doing a bit here and there. And that's what I see from a lot of people. But those aren't the people that I want to address in this video. I think for those people, I would just say, okay, it's halfway through the year. Take it like a fresh start and see what you can really commit to doing between now and the end of the year. It's going to fly by, and if you really dedicate yourself for a few hours each week, you can achieve a lot in that time. So just have a think about that. But really, I'm talking to the people who are committed. Now, this time of year is a perfect one for recalibration. So we always talk about optimization. I'm not going to talk about that so much. I want to talk about the topic of recalibration. So first of all, what do I mean by this? I know we've had a video about it before, but let's just sort of remind ourselves of what this means. So I always think of it like when I was younger and I had these toy cars. When you've got these remote control cars, after a while, even when you're driving straight, the wheels are like making a turn slightly left or slightly right. And when you turn the car over, you've got this little toggle, this switch that lets you recalibrate to make it veer slightly to the left or slightly to the right to offset what it's already been doing, so that when you're driving straight, it's still driving straight. In other words, this recalibration process is all about making sure you're coming back to what you should be doing. And there are a few different areas of our trading that we can do this for. Rather than going into all the details about what this would mean or what this wouldn't mean, I just want to talk about the practical side. So let's talk about how you can start to recalibrate this. The first one I want to look at is with your position size. So we all know that we have certain setups that are potentially higher probability than others. I don't think anyone really has one specific thing they're looking for every single time, because the markets are dynamic. So every time you're entering something, the context is slightly changed from one setup to another. So of course, there are going to be different situations with different probabilities. That's for everyone. Even if you don't realize it, it's happening for you. So you have different probabilities with the different setups that you're opening based on. Now for us with the Duomo method, it's kind of more straightforward. Although we have to take into account the context, as you would have learned in the IGTV lesson, we also have different strengths with the setup from different combinations of the levels and tools that we're using. So we can see how dependable these tools are and how strong they are. And this gives us some sort of ranking of how likely it is to succeed, how much we can depend on these setups. And combined with that, we also use dynamic position sizes, which means that our position size differs depending on the setup that we have. So if you imagine that we have this whole range of different potential setups with the different success rates, and then we have this whole range of different position sizes, it should be that they're matching up quite nicely, where the higher probability setups are matching with the higher position sizes that you use, and the lower ones are going to match with the smaller position sizes or probe trades and so on. So here's what I think you should do. I want you to map this all into a sort of table. It's more of a scale, but I tend to use Excel for this. So I would have a list horizontally of all of the combinations that I could have within reason. You know, I don't need to go into thousands of different combinations, but just broadly speaking, the different groupings of combinations going from the higher probability ones to the lower probability ones. Okay, so we've got that scale and then the ones in between along there as well. Then I want to go through all of my trades and start to figure out what combinations I used for each trade. And this in itself is going to be a good exercise because you're going to see if you actually had the right sort of setup in each situation. And I want to plot these along the table. So maybe trade number 5 was a high probability one that goes over here. It was this combination of tools, whereas number 17 was medium, number 3 was over here. So you've got them all mapped out. So let's say you had 40 different trades, you're going to have 40 trades mapped along this scale. Then I want you to go through each of those trades and figure out what the position size was for it. Now, obviously I'm not talking about the actual contract amounts because if you're using dynamic position sizing, that's going to change depending on the setup you have. But instead, the percentage at risk. When you entered that trade, what was the percentage that you had at risk? And hopefully you're not increasing that percentage at risk during the trade. Hopefully it will only be going lower than that. So what's the max percentage at risk you had for each of these trades? And then map them along this table. And then you can start seeing if they are actually aligned with this scale. It should be that your higher position sizes are over here and your lower position sizes are over here. Now, if that's not the case, if they're a bit more mixed up, then you know that you need to calibrate your position sizing. So you're obviously not approaching your risk in the correct way. And this is one of those things that can sneak up on you and you don't even realize it happening. Whenever I look at our members' trades, this is one of the first things that I look at, and I can see that it happens very, very frequently. And then you'll ask them about certain trades and they'll try to justify it because we always do. But you've got to kind of stop yourself from being able to justify it. Look at it as the cold, hard facts and realize you need to recalibrate. And if that's the case, maybe then you can start to set yourself some pointers for the rest of this year, for that next half of the year. What are some things you can go through with every trade that's going to help you to calibrate, to get back on track and to be having the appropriate risk for the appropriate setup? The next thing you can do to calibrate is one that we had in a video before, and I'm going to link that in the description box and we'll maybe have it at the end of the video as well. And this one's about calibration for the success rate, what you expect to be the success rate and what the actual success rate was. Now, this can only be done if you've been actually writing down in your journal what you think the expected success rate is for each of the trades that you're opening. Now, obviously, it's an estimate. We can't be exactly right and be like, well, that's a 60% success rate, but this is where the calibration comes into it. I think it was Philip Tetlock's book, Super Forecasters, where he spoke about calibrating, what you expect the probability of something occurring is, and over time, as long as you're sort of monitoring it against something, against the benchmark, you can get better at it. So what we want to do is look through all of the trades that we've opened, see what the success rate was, see how many of them failed, how many of them succeeded, and then look at them in groupings. So all of the ones that were 65%, how many of them actually were profitable, how many of them were losing, how many of them did what you expected, how many of them didn't. So you can start to see whether what the eventual outcome was of them as a whole was the same as what your percentages were. Now, this is a bit of an inexact science, so it's not going to have a dramatic impact straight away, but what it's going to do is to help you to slightly calibrate. You might be seeing that you overestimate most of the time, so you need to underestimate slightly, and that might change how you approach your risk, or even some positions, since they were borderline, now that you're calibrating, it means that you wouldn't be taking those anymore. So this is all the process of calibration, and you can look through your own trading system, the approach that you're using, and see if there are other areas that you need to recalibrate with. If there's other areas where you need to look at it and be like, you know what, I shouldn't be taking those trades, and slowly I've gone off track and started accepting them, let's rein it back in. Or the other way around, maybe you've started to get too tight on your rules, and actually there were rules that you're not following that allow you to open more trades. If you're not opening enough trades, which is a complaint I hear all the time, then it may be that you're becoming too rigid over time. You're learning more about the markets, you're learning more about what you should be doing, and as a result of that, you're getting gun shy where you don't want to open a trade. So recalibrating is going to help you with this so that you can move forward with the right steps to get you back on track. Now, obviously we have the whole subject of optimization as well, and seeing what steps you could put in place to really dramatically improve your trading for the rest of this year. But that's not something we can really cover in this video. It's something we've covered in many videos before. But what I will say is that it's a good time to collect up all of your trades, like the trade journal entries that you've got for different trades, including ones that you didn't take but you tracked, and also put all of the data into a spreadsheet I'm going to show on screen now an example of a spreadsheet you might want to use. So if you want to screenshot that or something, or come back to this video, then you can copy that if you want to. This is just a very basic example. And what this is going to allow you to do with the spreadsheets, you can start to sort the data, start to find consistencies, inconsistencies, biases that you may have. A good idea if you've got enough for sample size, which is something we're going to be talking about in one of the very next videos, you can actually then ask questions of the data. So you can look at areas of your trading that are maybe failing or not quite right or not how you want them to be, and devise a list of questions to try and find the root cause, and the data can help you find that. Now, I know this is a tricky thing, but the first point is to collect the data and start looking at things as a whole. I know mostly everyone looks at individual trades and looks back at their trade journal to see what they did right or wrong on each trade, but you also need to look at the whole, the bigger picture, to realize if there's something you're consistently doing right or wrong. So now, as it's halfway through the year, it's a good point to sort of draw a line in the sand and say everything that's happened up until now is that. I'm going to reflect on that, I'm going to learn from it, set new steps, and measure what happens for the rest of this year, and then compare it to that and see if it's better or worse. So I always like the process of reflecting on systems. We don't want to over-optimize or change things or become a hermit crab trader, but we do want to make sure things are the best that they can be. And by the way, if you're one of our premium members, then make sure you check out the forum, because I'm actually going to be choosing some of you to review all of your trading and to put it out as a video for the members area, so you can see exactly how we go through this process, and I can guide you for the rest of this year. But anyway, guys, I think that's all for now. So hopefully that's given you some food for thought. Like I said, it was a bit more of a discussion, so I could tell you a bit about what I would do at this point in the year. When there's these certain sort of milestones throughout the year where you can really use that as a benchmark for the next one, then I take those opportunities to reflect on what I'm doing. So hopefully I've given you some ideas of how you can look at your own trading and keep improving. I know it's a bit more advanced. Those of you that are just starting might not know where to start, but just look at what you're doing. Make sure that you're on the right track. Don't get into habits where you're just going through ordinary practice. Make sure you're doing deliberate practice. Make sure that every session you have is meaningful. Make sure you're learning from everything. And make sure you're subscribed to this channel, because we're actually going to be bringing out a lot more trading and investing lessons. If you like the video, please do hit the thumbs up. I appreciate you watching. It's good to be back, and I'll see you in the next one.